And smart money is now selling into retail's buying frenzy and FOMO action. But is there going to be a repricing in stocks? Of course, there's going to be a repricing in stocks. How the repricing takes place is another story. Welcome back in YouTube. So today we're going to talk about exactly what's going on in the market. If you guys missed the live stream last night, you would not be surprised by the price action that's kind of taking place today. So on last night's live stream, we touched on Palantir. That's actually what the video was about. It's been about this AI train that's been pushed on the retail investor. But AI has been integrated day in and day out through our lives. Whether it's bots talking to us and selling us a product on the phone, whether it's self-driving vehicles and airplanes, but artificial intelligence has definitely been integrated. It's just a matter of how much do we want to accept it. If we take our emotions and we take stories out of the equation and just truly look at investing, if I'm taking $20, where can I put this $20 to perform better than sitting in my bank account? And so on this channel, we really focus on not getting involved in stories. Yes, stories can be important, but more focused on the fundamentals and are we getting a good opportunity and a good risk versus reward. And a company like Palantir has really been getting picked up in the news, a lot of excitement around AI, and they're definitely a very, very interesting business model, a very sticky business model, and no doubt they're going to be around for a very long time. And I do think they will probably eventually grow into their valuation. The question is, what are you willing to pay for this stock today in order to get a rate of return in the future? And a lot is priced in the future earnings. I have a 2030 price target on Palantir right around $20. And if you followed the channel and got in the stock around $6 and $7, congratulations, you've made a tremendous amount of money. That has been my price target since day one, pretty much for Palantir. And my long-term subscribers, I think, have cashed in on this one. Last night I went live and I looked over the quarterly report and they earned 1 nickel, 5 cents. They earned 5 cents the quarter before, and that's adjusted. GAAP EPS both quarters was actually 2 cents combined. And when you really factor that in from an earnings per share, you're paying a lot of money for a few pennies. And that's why we're seeing a substantial move from $20 on Palantir down to roughly $16.50. And I actually think the stock is holding up fairly well when I consider the fact that the earnings remain flat while the price has moved nearly 200%. First thing I want to point out is the market is selling off, but also yields are coming down. And this is a weird combination. We normally see an inverse relationship. Along with this taking place, we have oil that's been elevated, which means that inflation is definitely going to remain sticky. Inflation on energy cost and inflation on wages, in my opinion, are going to be a lot stickier than anticipated. And that could be the catalyst that actually drives us into a recession. Now, as you all know, I tend to think recession is coming at some point in 2024. The consumer's balance sheet was much stronger than I anticipated, along with corporate balance sheets with all the stimulus that was passed through the economy. Now we have something changing here. The consumer behavior is starting to actually shift down. We're seeing people that make 6 figures really pay attention to what they're purchasing. And with that consumer debt being at all-time highs, we have interest rate at all-time highs, which means that debt is getting very expensive. And Credit Suisse strategists are saying that stocks may have peaked. Now, this is something we talked about a few weeks ago on the channel, thanks to Gabe's charting. Gabe, big shout out to you, man. And specifically, I want to highlight dumb money versus smart money, which Gabe highlighted here. The purple money, guys, is going to be smart money here, buying the bottom of this market. And if you've been following the channel, I tend to think that anywhere between 32 to 3,400 makes a tremendous amount of sense for this valuation today. Now, with earnings not being as bad as anticipated, I understood that we could be trading closer to 4,200. But now where we are, I think we're getting a little bit elevated. And so what Gabe has pointed out here is the fact that smart money has actually stopped buying this rally and is now handed it off to dumb money or retail investors, along with people that are really leveraging, that have missed this recent run up. And what we're starting to see is zero dated option calls. We're starting to see kind of these meme stocks and stocks that are popular to retail investors really make violent moves. And when we saw this before, that was actually a sign of a topping process. We can't break out to new highs, and then all of a sudden we get a repricing in stocks. And I tend to think it's the same thing as last time. And if you guys have followed investor behavior, we are in the complacency standpoint of investor behavior. So not only do we have retail slowing down here, smart money slowing down and riding up this basically free money that they're earning on retail investors getting irrational and FOMO, but we have a clear path to what I believe a crash normally forms here. We have euphoria that takes us to the top of the market, and that would have been the tremendous amount of stimulus that was being passed through the economy when we had COVID. Everybody was staying from home and shopping and basically transitioning their stimulus money to corporate earnings. And corporate earnings absolutely skyrocketed, which then skyrocketed the stock market. Wealth was being created through thin air. And now we're in this point of complacency, in my opinion, where we've had what everybody thinks is a crash, and people think that there's now going to be a soft landing. But if you look at the rhetoric from 2001 and 2008, when both crashes took place, everybody thought there was a soft landing. Very, very similar setup. And that's when we come into complacency. And this is where I think retail investors are right now. As we saw by Gabe's chart, smart money was basically buying this dip here, and now retailers taking it over, and smart money is selling into retailing move. And smart money is now selling into retail's buying frenzy and FOMO action. But is there going to be a repricing in stocks? Of course, there's going to be a repricing in stocks. How the repricing takes place is another story. And I believe it's going to happen in one or two ways. Either A, I'm completely wrong, no recession's going to happen, and we're going to have a soft landing come in the middle of next year, and inflation's going to get under control. But I tend to think what's going on with energy prices and what's going on with the consumer, that is not going to be the case. There's only one way out of this, and I tend to think the Feds are going to have to break something if they already haven't broken anything with the recent lag effects that are going to be taking place. But let's fast forward to what if we have a soft landing? If we have a soft landing, there still needs to be a repricing in stocks, as where we're trading on a fundamental standpoint is very expensive. Actually, it's historically expensive. And when you have a historically expensive stock market, the expensive stocks need to sell off while we need the other stocks to start catching up to the rally. And I just don't think that's going to happen because that rarely happens. What normally happens is we get a complete washout, a crash, and that is the best opportunity to pick stocks with strong fundamentals, low valuations, and that have earnings power even through a recession. And that's where my mentality is right now. And this is where the consumer is all based on, guys. Energy prices is based on consumer behavior. If energy prices go up, that is fuel to fuel your car. That is airplane tickets. That is heating and cooling your house. These energy prices are going to impact the consumer and actually shift, in my opinion, consumer sentiment to the downside if we start seeing a spike in energy. That'll also put us into a recession because consumer spending is the only thing propping up this market, along with a strong job market. But I want to make something clear about this strong labor market. We don't know the quality of jobs being posted for this labor market, meaning there's a tremendous amount of labor available, but we don't know what's going on with all the IT and banking layoffs taking place. Are these individuals really going to go out and ride trucks and do logistical training versus going and trying to find something that they actually specialize in? And this is where I think the labor market's disconnected. I tend to think most of the labor market that is available is going to be logistical positions and manual labor versus more of your white collar type work. And we're seeing white collar being laid off, and we're seeing more blue collar jobs available, which is where the disconnect, in my opinion, is taking place. We also don't know the pay differences in those type of job availabilities. So this whole job market, in my opinion, is very suspect. But I think it's getting cracked up right now, and it's something to follow. As always, guys, appreciate your time. Hopefully you enjoyed that dive in. We will see you tonight on the live stream. Bring your calculators, so we're going to dive into some stocks. Peace.